Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase. Now we start this week with a market closure in the US for the US President's Day public holiday. Many of you might already know this public holiday was first marked on George Washington's birthday, following his death in 1799. But the public holiday was subsequently moved to the third Monday of February after the Uniform Monday Holiday Act sought to shift several US holidays to predetermined Mondays. Interestingly enough, the thought here was that creating 3-day weekends would reduce employee absenteeism and support retail sales. Now, while our American friends enjoy a 3-day weekend, hopefully enjoying some retail therapy, we'll be focusing instead on a few key areas in the week ahead. First, we do believe Ukraine is likely to continue dominating the narrative. Recall we discussed on Friday that many geopolitical analysts see the risk of a protracted conflict as relatively low and that geopolitical events tend to have relatively short-lived impacts on markets. What this means is that we'd rather hedge against any military action via gold or the yen rather than reduce core allocations. However, oil, together with natural gas, remains key, as this remains the main channel any conflict spills over into financial markets. For now, though, market prices very likely already include some geopolitical risk premium, and short-term technicals on oil prices argue the rally may have already gone a little bit too far too quickly. We also had reports on Friday that the US and Iran were again close to a potential deal, and this time WTI oil prices retreat to about $91 per barrel on Friday, as any agreement, of course, could increase net oil supply in the market. Now, second, we'd also keep a close eye on key technical levels, particularly on major equity indices and whether they break below key support levels. For the S&P 500, for example, technical support around 4222 is turning out to be key. A hold of this level may brighten the outlook, but a break could mean a renewed sell-off before the current pullback bottoms more firmly. Europe's Stoxx 50 also appears close to key support levels around 4,050. And third, the discussion around the path of Fed interest rates is likely to continue. Last week, Fed Governor Brainard said the Fed was likely to kick off a series of rate increases, though New York Fed President Williams and Chicago Fed President Evans both sought to lean against earlier talk of a 50 basis point rate hike. This week, of course, several other Fed policymakers are scheduled to speak almost every day of the week, so we'd listen into each of those. Finally, there are 3 sets of economic data we'd pay attention to. Global PMI data early this week is likely to provide a good gauge on manufacturing sector sentiment. US PCE inflation, personal consumption expenditure inflation, that data is due on Friday in the US and it's likely to provide another take on what is a broader measure of inflation, often favored by the Fed. And finally, Singapore is set to also release January inflation data. Recall this follows what was upbeat exports data last week. And Singapore exports is often a good gauge of regional and global trade. And it follows the release, of course, of Singapore's budget last week that showed the government is set to run a deficit for the 4th consecutive year. So busy week ahead, quite a lot to watch, and I'd particularly emphasize the technical levels, but we'll take a pause there. If you enjoyed this podcast, as always, please don't forget to rate and like it. Thanks again for listening, and we wish you a happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.